Good morning and welcome to the ADS Securities Markets Update. We'll start our video today with a look at the FOMC decision, which came in line with the market's expectation, while Yellen remarks showed mixed reviews. First of all, the Federal Reserve decided to taper QE by another 10 billion, which makes the QE again at 35 billion on a monthly basis. The Federal Reserve also decided to cut the growth and the unemployment rate forecast, while it increased inflation projections again. The Federal Reserve also showed no concern regarding rising inflation, despite the fact that year-over-year CPI is above 2%. Janet Yellen also avoided to speak about the first rate hike, saying it all depends on the economic developments. Most importantly, Janet Yellen finally admits that declining unemployment rate is driven by a declining participation rate. However, she still calls it as an improvement. Finally, also, Yellen stated that reinvestment will continue. However, the committee will reconsider the program very soon, while the highly accommodative policy is appropriate at this point. These remarks match the US dollar almost across the board, declined the most against the Aussie and the Kiwi, while the euro dollar also touched 1.36 and the pound also retested 1.70, and gold is above 1280. The next few weeks are very significant, as more and more negative data might be the game changer for the Fed in July meeting. During also the Asian session today, New Zealand GDP came in slightly disappointing, as the economy grew by 1% in Q1, while it had been anticipated to grow by 1.2%, leading to a slight decline in Kiwi back to 87.10. During the European session today, we will be focusing on the SNB, or the Swiss National Bank rate decision, which will be released at 7:30 GMT time this morning. The Swiss National Bank is expected to keep the current policy unchanged, with the LIBOR rate below 0.25%. In the UK, retail sales will be released during the session, and the expectation points to a decline of 0.5% in May, which would be the first decline since 3 months after a rise of 1.3% in April. Going forward to the US session today, we will be focusing on two economic data sets. The jobless claims is expected to decline slightly to 316,000 last week, down from 317,000 the week before. And finally, Philadelphia Fed Manufacturing Index may decline to 14.3 in June, down from 15.4 in May, which would be the second monthly decline in a row. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, report, and analysis. Thank you for watching.